Yeah, hi, good afternoon everyone. This is Desh Pushan. I have created this short straddle on Friday, 36,500 short straddle. I'll tell you the logic behind this short straddle, why I have created this short straddle. If you look at the Bank Nifty chart on the daily time frame, so Bank Nifty is touching to the upside resistance here. There is one trend line. Let me draw that trend line first. Okay, so here is that trend line. Okay, so Bank Nifty touching this two trend line again. Second reason, second logic to create this, if you look at the vertically, right, horizontally, so there is a gap here at the resistance here, and this gap is act as a support. And third logic to create this trade is, again, market has been traveled almost 2000 from this point to this. Okay, and this rally is with the only single candle pause at the 20th of July. Okay, so I was expecting some retracement here, and that has been happening on the daily time frame. Okay, let me go on the 15-minute time frame, what is happening. Okay, so if you see this trend lines and the horizontal lines are matching here. Let me remove and let me draw the levels here again on the 15-minute time frame. So if you look, if you analyze my trade, okay, where my break even stands at, my break even stands at the downside for 35,800 and upside at 30,000, 37,200. Okay, and let me draw it out on the chart as well. 37,200, so it stands somewhere here, right? And 35,800, so it would be here, right? As long as market is closing this expiry between this range, and this probability is again very high, because market has to travel around 1000 from here to upside, and 1000 from rally, 1000 point rally to the downside, right? So this probability again is very low. Okay, I'll tell you logic of why this probability is very low. One, at weeks, if you look at the India weeks, is trading is around 18.22. So as long as it's not going to cross the 20, the probability of opening to market to open around 200 point gap down, the 300 point gap down, or whatever it is, that probability is again very low. Second, if you look at the OI data, okay, so 36,500 calls and 36,500 puts has been aggressively returned. So highly straddles are created at these both point, and downside the 36,000 is acting as a major support, and upside the 37,000 is acting as a major resistance. Okay, so my break even stands outside of this range, this OI data range. Okay, this is the another logic. If you look at the change in open interest, okay, so some short short covering is happened at 36,700, and calls has been returned 36,500 aggressively. This is the again the second logic. And third one, if you look at the put call ratio, okay, so it is completely indicating is that market is sideways as long as it remain below 1.2 or above 0.8. okay, so this range is considered as a sideways move, and this is completely happening. Look at the 15-minute chart. So market opened somewhere around here, it came down, okay, but it's not aggressively closing below. This is not a falling market. Market has to be fall, then it's need to be very fast, and that is not happening. That's why I'm going to hold this position tomorrow as well. If you look my profit, so morning when I open this trade, when the market has been opened, the my My profit was is around 4100. Now it's around 5600, because theta is happening at the both both call and put very fast, because today is Tuesday and tomorrow is Wednesday, so both day theta decay is the faster one. Again, there is one event called feed mate, which is undue on the 29th of the July. Before that, market will take a pause here on the daily time frame. So I was expecting this expiry will be closing within this range. As long as market stays this range, I'll be keeping this position open. If this range is breaking, then as per the the price action, I will be closing my position, but somehow I'll ending with the profit. Yeah, that's all from my side.